What are some of the risks that you see associated with Nook? And can you give us more context into some of these risks and how you see it playing out?
So Nook can connect you to money markets through stable coins where your funds are lent out and you earn roughly 2 to 3 times what's in your bank account. So if you're
Right.
getting 3% in Betterment or Cash App, you're getting typically 6 to 7% or higher through Nook.
Right.
So I always break it down into risk and reward, right? Because that's an important equation. The risk of working with a product or earning with a product like Nook is higher than a traditional savings account because it's not FDIC insured. So the FDIC insurance program provided by the United States is very powerful in terms of if anything happens to that bank, regardless of it's their fault, someone else's fault, etc., your money is backed by the federal government. We are not FDIC insured. I do not think this will ever be FDIC insured, but we are working on private insurance up to $10,000 to $100,000 per account and higher. The main risk, however, of Nook to consider is really 3 parts. One is smart contract risk. The second is economic risk. And the third is counterparty risk.
Right.
So I'll break all of those down and why we think they're relatively very low risk. So not no risk, but very low risk in our opinion. The first is smart contract risk. So when you put money on Nook, you basically enter your money into a money market, which is an agreement between a borrower and a lender of I will give you my $1,000 and you will borrow that $1,000. In order to get that $1,000, you putting in an over collateralized loan. So you're taking your assets and saying, hey, I'm locking this in via binding smart contract. And therefore, if anything were to happen to you or your funds, we liquidate that smart contract and I get my money back regardless.
Right.
So you can't run away. You can't default on this smart contract. It's not a paper loan from a traditional loan sense
Right.
of an IOU built trust system.
Right.
So even if you were to not repay your loan, we still have your assets locked up in collateral.
Right.
There's always a risk that smart contract could fail in terms of it gets hacked or there is a flaw in the code. And to date, with our earning protocols, that has never happened. Only work with the highest rated protocols. They really focus on one, the code and the over collateralization, so that they take a lot of the borrower's assets to ensure the lender's assets are safe. And that's a huge focus for us in terms of we only work with those types of people. Right. And those protocols have over $70 billion in value on their platforms. And so Nook represents just a small portion of that. But we think it shows confidence in the overall market to put $70 billion of value into these protocols and grow from there. So that's number one. Second will be a little shorter. Second and third will be a little shorter and easier. The second one is financial risk. So there is always a chance, a very small chance, of liquidity crunch. So if everyone all at once were to try and leave the $70 billion market at once, there's a question of could this all work at times?
Right.
The answer is, to date, again, it has always worked. In terms of the system works appropriately, where if me, the lender, wants to get out suddenly, or you, the borrower, wants to get out suddenly, you've always been able to get liquidity. So you can always withdraw or remove funds at all times. That's been the case in the past. Even 2 weeks ago when we saw a huge crash in the market, everything worked as expected. So there's always economic risk of, hey, if everyone were to leave all at once or to join all at once, historically, again, we've only worked with the top rated protocols. They have stress tested this over and over and over again and real life tested this, and it's always passed. Mm-hmm. The third part is counterparty risk. So when we say counterparty risk, that's a very fancy phrase of saying something fails. And when we say something fails, that means there is a fundamental hack to our system, our earning protocol system, or the fundamentals that we're built on. So we only issue your funds on USDC, which is a product of a publicly traded company called Circle and audited thoroughly by many firms, including Deloitte. So we think they're a very well-established company. Your funds are backed 1-to-1 in treasury. But if for some reason something were to go wrong with Circle, one of our counterparties, there is a risk there. Again, that hasn't happened to date. There was an issue about 3 years ago where there's a slight dip in price, but it came back. And since then, there's over $300 billion on Circle. Right. So if it were to happen to us, it would happen to a lot of the financial world. But Circle and USDC right now is really kind of the core code that creates the banking system today in a lot of ways. So there's that counterparty risk, including the protocol counterparty risk. But again, everything's been audited, been running for over 5 years, over $70 billion in assets on these platforms. over $300 billion in USDC on Circle. And then we ourselves do our own audits and have transacted over $300 million. We're depositing funds. We are rebalancing your funds to the highest earning protocol. So we've really built it with security in mind, and we've really tested it with security in mind. We were building Nook for months before we ever even shared it with any customers, any potential issues, to make sure that this really was the safest way to earn. So that's probably the most concrete breakdown of the three risks. We think they are all individually very low and collectively very low, just really based on how we built Nook and then how these systems are built. But it is important to be very open and public about this. We think the risk is incredibly low, but it is not zero risk.
Right. I think that's a wonderful breakdown. I think you really encompassed the risk.
It was a long one.